AERC hit 60% off of support and 50% through break of resistance. I alerted both in my Discord group as well as Benzinga Pro with levels of interest on this one. I'll show you how I got those levels and how you can trade stocks like AERC in the regular hours. Make sure to smash that like button if you haven't already, and let's get right into the video. The first thing I always do is check to see if we have breaking news to pair with price action and volume. Once I've confirmed that there was breaking news, I'll check the scanners to see what kind of volume we're seeing into the stock. Our scanners work as a radar basically to pick up volume and price action, and then we execute the strategy we have set in place for ourselves. So I either use Benzinga or Trade Idea scans whenever I'm looking for volume and price action pouring into one of these names. Once we determine that a stock is worth our time, we'll move on to the next step. For my own trading, learning how to mark support and resistance has been a huge advantage, especially in a bearish market. By marking support and resistance accurately, this has allowed me to extend my profits while minimizing my risk. I then made sure to alert my Discord group of the levels of AERC that I was watching. A close over resistance of 912 or a test of support area 841. I then also took the time to then go alert in Benzinga Pro where I'm a moderator in the chat. Same levels, 912 resistance or 841 support. Now let's take a look at that chart to see how these levels held up. As we can see, we tested that support area of 841. We then saw a move up to that 912 resistance and it struggled to close above the first time. After the second close above, it took off from there and never saw these levels again. Our next area of interest would be 1061, which we tested and broke and then held these levels as well. Once we broke that resistance, of course our final resistance of 1282 came into play, broke through that level, then testing a daily resistance above there, only to give us a 60% trade off of support. By now you must be wondering, how did I get those levels? Well, pretty simple. Switch over to the weekly chart, see all those red candles? Let's mark them. Now your weekly chart should look like a giant mess of lines, but that's okay, stick with me. Although I'm more concerned with weekly levels, I will switch over to the daily chart and mark those levels as well. Any major candle I see on a daily chart, I'll mark with a purple dotted line. Once we have our major levels marked, we can switch back to a smaller time frame. For me, it's pretty simple. I just set an alert at each one of these levels and watch price action and volume to see if it fits my strategy. Now that we have our levels marked, let's move on to the next step. The first strategy we'll take a look at is the anticipation trade. Anticipation trading is when we're buying anticipating that it's going to hold that level of support. So you could either buy there with a mental stop or buy there and have a hard stop somewhere below your entry. So for an example, you could set a buy order around support with a stop loss wherever you're comfortable trading. This would be an example of anticipation trading. Here is another example of AERC on the anticipation trade at support where it worked out. Having that 20-cent stop loss allowed enough room from support to then make a move. Now, keep in mind that different market conditions will have different effects. Sometimes we'll blow right through that support level, which can then result in a loss within minutes or less. The next strategy we'll take a look at is confirmation trading. This strategy is a little bit more complex, especially for beginner traders, as it has you actively trading throughout the day. With confirmation trading, we're looking for a candle to close above resistance to then act as support. We'll then look for that support level to enter in. If we see a close back below that support level, we'll look at this as a bearish signal or a red flag. The trick to this strategy is discipline. You have to be disciplined enough to exit whenever we see a close below that support level. This is what I mean about actively trading. Sometimes I'll be in and out of the same stock multiple times throughout the day, and maybe the first 2 tries didn't work, but maybe the third time did. This strategy can be hard for beginner traders as it requires you to be able to shake off any bad trades that you make and move on to the next opportunity. I used to get frustrated with taking a small loss and then just watching the stock skyrocket without me. Now actively trading allows me to stay in the trade while having a planned strategy in place. Now, of course, just like anything else, nothing is 100%, so that's why the stop loss is always going to be set, whether it be a hard stop, trailing stop, or mental. Now let's talk about combining strategies. As a trader, you have the ability to combine strategies to add conviction to your trades. A few examples of strategies that other traders prefer are above VWAP, above EMA levels, or maybe even RSI divergence, or just simply RSI oversold. When we combine these strategies with our support and resistance levels, this can be a powerful tool as a trader. Now I'd like to share a couple day trading rules I set for myself. One rule for me is no stop, no trade. Whether it's a hard stop, a trailing stop, or a mental stop, I'll always have a stop loss on the trade. I don't ever hold these stocks overnight, and I'm just looking to get in and out as fast as possible while protecting myself as much as I can. Another rule I live by, no volume, no trade. If I can't get in and out of my trade comfortably, I won't take the trade. So for me, no volume, no trade. If you found any value in today's video, smash that thumbs up and feel free to join our free Discord today. I'll leave the link in the description below.